I think they're positive. At least the high-level discussions have begun. They've shaken hands and they're talking with each other again. That there's no real concrete progress, like Sam mentioned, in the form of a military kind of cooperation or talks. But at least first steps have been taken. Sure, he's called Xi a dictator, but that's I think he's speaking to his voters, and Xi probably understands that as well. So it's good, but I think the tensions will never go away. They are here to stay, and for investors in China, they just have to factor in a larger premium on risk for these tensions.
Right. I do want to get your sense on what would the impact be of these, top-level conversations on business and business sentiment, because we've had some of the top U.S. leaders, business leaders, visit China and talk about positive relations there.
Yeah, I think business sentiment is clearly negative in China, especially for foreign businesses. So re-establishment of such high-level contact and really China showing that it's open for business and being more welcoming and perhaps even being more clear when it comes to the regulatory aspect of doing business in China, that will be helpful for confidence to return. But right now, I think it's clearly negative.
But can confidence return on an ADR basis? Because, you look at it from the perspective that, yes, you can have what we had, say, over the course of the last week, right? You had this pretty significant beta chase that got completely cleaned out within the course of a day, two sessions at best, right? And you have this overlay with the geopolitics. You have, even chatterings about even further impositions that are going to be placed on US investors, particularly investing into China. And I suppose the question then becomes, if you are an investor that would normally express that willingness to take advantage of China's growth via an ADR, wouldn't you just do that in India? Wouldn't you just do that on a second-order basis across the rest of ASEAN, rather than risking any kind of, political or regulatory risk on the US side by investing in some of these names? Yeah. What would be the point?
Yeah, I think you're exactly right. So right now, we probably still have more sellers than buyers. So in June, we've seen a decent rally, but in the last week, it's almost given half of it back, right? Which tells us that, there are people lining up to sell these things. But I think at the end of the day, what the companies and what the market has to look at is the growth potential. Like you rightly mentioned, India has a much longer runway for growth given its demographics. And I think the Chinese companies will have to show that beyond the swift rebound from COVID and the growth that comes along with it, the companies have the ability to generate sustained and reasonably high growth over time with strong earnings growth. And with that, I think investors will be able to look past that extra risk that they will have to take in the form of geopolitical tensions, in the form of unpredictable regulatory actions, that they just have to add on that risk premium to factor it in if they can see the growth. But right now, in the first quarter so far, we've not seen the growth yet.